Welcome back, guys, to another video. It has been a crazy last 7 days, 1 week and a half of just volatile mortgage market with the rates going up. Today we're shooting this March 3rd and today's rates are at 7%. Now we've seen a pretty volatile market throughout the year, but the last week we've seen a whole 1% jump in rates, where rates were sitting at around 6% a week ago and today they're at 7%. So this has caused a huge affordability issue right now, with a lot of people priced out of the market. Some people that were in contract had not locked their rates. They've seen a full 1% jump. A lot of those people are in trouble if they were just borderline qualified, and now they are not. So in today's video, I'm going to cover two main topics. Number one, why this is happening, why the rates have gone up 1% in just the last 1 week, and when will home prices come down. So if you're an active buyer in the market or just looking to tap in the market, this video is for you. So let's get started. So rates were around 7% back in November. Then towards the end of the month, I'm talking about November 2022, the end of the month they started to adjust, and all of January they were hovering around 6%, in some cases 5.875. In some cases you might have even got 5.5%. But just recently the rates have gone to 7%. And buyers were starting to adjust. We started to see more people coming out in the market, and we're heading into spring. A lot of inventory was coming. So there was a lot of movement happening in the market, and then the rates just went up a week ago. So let's see what the rates have done to your mortgage payment. If you were buying a $600,000 home with 5% down, which makes your mortgage payment at $570,000, and if your interest rate, which was last week, was at 6%, your payment is $3,417. Now with that 1% jump, with the rate at 7%, your payment is $3,792, a pretty big jump. A dollar difference of $375 and a percentage difference of 10.97%. Let's just call it 11%. Now, if you're buying now compared to if you were buying a week ago and you had locked your rate, you're getting almost 10%. You're able to get 10% less of a house. So if you were borderline, you're not qualified. So affordability is a big issue in the real estate market right now, with the rate sitting at 7%. Why did this happen? Two main reasons come to mind that I feel that has caused this to happen. Number one, the CPI index has went up 0.5%, which states that inflation went up a little bit. So as you all know, the Federal Reserve is determined to bring inflation down, and they have made it very clear that when inflation goes up, if it goes up, we're going to continue to keep increasing rates to bring down the cost of goods. Now you're probably wondering, well, the Feds did only a 1/4 point hit in February, but the rate actually went 1%. So what is happening here is, I've phoned a lot of my folks at Wells Fargo, Chase Bank, a lot of VPs out there, and a lot of people are just puzzled at why this is happening. But the common sentiment is that a lot of lenders are adjusting their margins because they know there's another Federal Reserve meeting coming up in March, and they have indicated that they are going to increase the rates in that meeting. So I believe, and a lot of other people in the market do believe, that all the lenders have adjusted their margins and increased their rates, because when that next increase happens, they want to have a little bit of a wiggle room there, where they can play around with the rates, and maybe the rates will sit at 7, or they might come a little lower. So lenders have definitely adjusted their margins. The rate's at 7% right now, and affordability is a huge issue, like I mentioned earlier. Now, all of you are probably wondering, well, when will home prices come down? So before we talk about that, let's talk about why home prices have not come down. And we've had almost rate hikes for all of last year, and now the same trend continues. Well, the number one reason home prices did not come down was because due to inventory. Inventory is still low here in the East Bay area. If we look at the city of Fremont, Right now, for the report of January 2023, the monthly supply is around 0.8. It's not even one full month's of inventory. Now, inventory did go down, did increase in the mid months of 2022 in this city, where it was around 1.8 and it was almost touching the 2-month mark. But then markets started to adjust to the new rate market. People came back out and started looking at houses. Shelter is still very important in this country. People believe in homes, and it went right back down. So inventory is very low, and that's a main factor that prices have not come down, because if you've noticed, and if you've read articles, or if you were alive in the last crash, or experienced, or if you were old enough to understand what happened in the last crash, there was just surplus of inventory. A lot of new builder homes were out there. Lots of existing homes were out there. There was almost 6+ months of inventory available, and then a lot of foreclosures started to happen because people were just not buying homes, and banks had to foreclose those homes. And that is not the case right now, with inventory being very low. Number 2, rents are high. Throughout the country, rents have seen a significant increase after the pandemic. Just as home prices went up, rents also went up. And in lots of parts of the country, you have where it makes sense to buy. Maybe not here in the Bay Area, where if you're in the East Bay Area particularly, we're talking about the city of Fremont, average 3-bedroom, 2-bath home is sitting at around 1.4 million. Maybe it doesn't make sense because you have to put significant money down, and it would make sense for you to rent. But if you're in the Sacramento market or other parts of the country, where now if you compare rents to the mortgages, it makes sense to buy a mortgage. Even with the increased or higher rates, maybe your mortgage is a tad bit higher, but the numbers still make sense because rents are so high. So that's another factor that you have not really seen downward pressure on prices, because people still want to buy homes because rents are very high. Number 3, we have record low unemployment. Right now it's around 3.4%, which is the lowest it has been in 50+ years. Now, you can argue that a large part of that unemployment is the labor force. The people that are making, the top tier, it's a very small percentage that makes up our whole employment percentage, or whole employment population here in this country. And a lot of those people that are employed, that are in the labor force, can't really afford a home because affordability is out of reach. But unemployment does create a sentiment or an emotion of hope and possibility and positivity. So unemployment being low has also been a factor of the housing market still staying strong. Now, if you own a home and you say got laid off, but you're able to recuperate because there's other jobs out there, you're able to find a replacement job, in that case it worked really well, because you're seeing less foreclosures, because now people that have lost their job and now they're the single earner in the home are able to easily find the second job or the next job. And so you're not seeing foreclosures happening in this country on a mass level. If you're getting real value out of this video, please hit that like button, because when you hit that like button, YouTube shows this video to more people like yourself. And if you really are enjoying this content and you feel this content is useful and practical to you, hit that subscribe button. Thank you all. Love you all. Now on to the next question. When will prices drop, and will they drop? If rates continue to go up and inflation continues to rise, because that's going to be a big factor here, the next numbers that come up for the CPI are going to be very important to watch, because if inflation continues to go up, the rates will continue to go up. And if the rates go up further, that will put downward pressure on prices of homes, because you'll have a lot of sellers out there that have to sell, even though there's low inventory out there, but there's a lot of sellers that need to make that move and there's no buyers coming. And then you also have builders that have these lots already planned out. They have a whole map of what they're trying to do in the next 1 year, year and a half, 2 years, and people have put their monies or EMD deposits there with the builders. So if rates keep going up, the builders may lose significant money if their homes are not selling, because people are priced out. So they may start to make adjustments on their prices. Same thing happens on the existing homes if sellers need to sell and not enough buyers are coming. Like for example, right now in the city of Fremont, we're looking at average days on market in the month of January 23 was 27 days. That same month last year in 22, the average days on market were only 12 days. So average days on market are already higher, because the common sentiment has been that, oh, let's hold off, let's not buy, because rates have been slowly on the rise, but now they have risen even further from where they were like last month. So if that days on market, say in the city of Fremont or other parts of the country, goes from 27 days to 40 days, 45 days, that will put downward pressure on home prices, and home prices may start to come down. Now, when is this going to happen? This rate change just happened now, and as you all know, real estate is a lagging indicator. You're not going to start seeing the reports come out till like the end of this quarter, or maybe even in the months of May and June, that's when you really start to see what's going to happen. But another thing to watch very closely is going to be the next Fed funds meeting, which is coming up in the mid-month of March, where they have indicated they will most likely do another rate hike. It's going to be very interesting to see what happens after that rate hike of March, because I believe that the lenders may adjust their margins because they've already raised them right now, and they might bring the rates back to 6%. Might all be a game they're playing with us, but I feel like this may happen. And if that happens, then I feel prices may sit where they are. So nobody really knows what's going to happen, but I feel the margins may get adjusted after that rate hike in March, and we may see the rates come down a tad bit in the month of March and April. But hey, who am I to say all this? You know, markets do what they do. It's always a loser's game to predict the markets because you just never know what's going to happen. You could have been in the market in the last crash, or you could have bought your home before then and bought a whole portfolio of homes, and you could be a savvy investor. You just don't really know what's going to happen, but it's very important to know your numbers of what's happening right now. Now, all these things that I'm talking about are out of our control. Let's talk about what is in your control right now. Now, the rates are at 7%. We know that. So it's really important to run your numbers because this may create opportunity for you. There may be a seller out there right now that needs to sell in the next week, 2 weeks, 3 weeks, and the rates are high and the market has slowed down and a lot of people are out of the market and it's unaffordable, but you like a home and the numbers work for you. You can make ridiculous offers right now. Maybe the one won't work. Make another one, make a third one, make a fourth one, make a fifth one. Something may stick because we all know when it is a good time to buy, when it's not a good time to buy. And it's very hard to predict those times. But you can try and take advantage of this market because there are always opportunities when the market is volatile. Now, by all means, I'm not telling you to take advantage of this market if your pocket does not allow to do so. That's why it's very important for you to run your numbers and see what is your mortgage payment, and does that mortgage payment make you feel comfortable? Can you survive if you were to make that mortgage payment? Can you feed your kids? Can you do other things? You want to make sure that you are comfortable with that number, and if you are, there will be opportunities out there. That's all I have for today. I hope you've enjoyed today's session. Until next time, this is Karan saying